The banking system. It's this incredibly powerful force that pretty much shapes our entire world and our daily lives, but for most of us, let's be honest, it's a total black box. Okay, so let's dive right into this and try to unravel how this massive, complicated system actually works.
I mean, just to get a sense of the sheer scale we're talking about, look at this number. There are over 44,000 banks scattered all across the globe. It is a truly colossal network. And these banks aren't just empty buildings. When you add it all up, they are managing hundreds of trillions of dollars in assets. That is an almost unimaginable amount of money flowing through this system every single day.
Which, of course, brings us to the big question. We all use banks, right? But how many of us can really confidently say we understand what is going on behind the scenes when we deposit our paycheck or swipe a credit card? Well, it turns out our whole common understanding of banking is basically built on one simple foundational illusion. And once you see past it, I promise, everything else starts to make a whole lot more sense. So let's start with the most common myth there is. The idea that when you put your money in the bank, it's just sitting in a big steel vault with your name on it. Yeah, we're about to bust that myth wide open.
So how did we even get here? This timeline really shows the whole evolution. It started off simply enough, right? People stored physical stuff, like grain. Then, with currency, banks started storing gold and just gave out paper receipts for it. Before long, people realized, hey, it's way easier to just trade these trusted pieces of paper. And boom, that's how paper money was born. But the really huge, game-changing moment came in 1971, when money stopped being just a claim on gold.
And that created what we all use today, fiat currency. Its value isn't tied to a pile of gold sitting in a vault somewhere. Nope, it's based entirely on our collective trust in the system and the government that issues it. And understanding that shift, that is absolutely crucial to understanding modern banking.
Okay, so if banks aren't just giant storage lockers for our cash, then what are they doing? Well, this brings us to their real core function, which is to act as the engine of our economy.
The moment you deposit money into your account, it's not put on some shelf to gather dust. No way. It is immediately put to work. It becomes an active, moving part of the economy. The way this all happens is through a process called fractional reserve banking, and this slide just shows it brilliantly. So let's say you deposit $1,000. The bank is required by law to hold on to a small fraction of that. Let's call it $100, just as a reserve. It then lends out the other $900. Now that borrower goes and spends it, and whoever they paid deposits that money in their bank. And guess what? The whole cycle starts all over again.
And the effect of this is just incredible. That single initial $1,000 deposit doesn't just stay $1,000. As it gets loaned out and spent and redeposited over and over and over again, it can end up creating up to $10,000 of real economic activity. That's the mind-blowing power of the money multiplier.
So when you really boil it all down, a bank is just a middleman. That's it. It takes money that's just sitting around not being used, and it connects it to people who have productive ideas. Someone who wants to start a business or buy a house or invent a new technology. This whole process is what fuels jobs, growth, and innovation.
But this powerful engine also comes with some serious inherent risks. So let's take a look at what happens when this very delicate system breaks down.
So, broadly speaking, a bank can fail in two main ways. The classic one you see in old movies is a bank run. That's when everyone panics and tries to withdraw all their money at once. The problem is, the bank just doesn't have that much physical cash on hand. The more modern way a bank fails is from making bad loans. If a bank lends out too much money to risky borrowers who can't pay it back, its assets basically become worthless and it collapses. And that's exactly what we saw happen in 2008.
But the real danger here isn't just one bank failing. The huge problem is that all these banks are interconnected. They're constantly borrowing from and lending to each other. So the failure of just one major bank can trigger a chain reaction, a domino effect that can threaten to take down the entire global financial system.
So how do we prevent that kind of catastrophic collapse? Well, that is where the ultimate overseer comes in, the central bank. You can think of it as the bank for all the other banks. The central bank plays a few absolutely vital roles. It helps commercial banks settle payments with each other. It acts as the lender of last resort, meaning it can provide emergency cash to stop bank runs. And, most importantly, it manages the nation's entire economy.
And its single most powerful tool for managing that economy is its ability to set interest rates. This is how it steers the economic ship, either speeding it up when things are slow or tapping the brakes when things get overheated.
Here's a quick look at how that actually works. When the central bank raises interest rates, it immediately becomes more expensive for banks to borrow money from each other. Because of that, they turn around and give out fewer, more expensive loans to people and businesses. This means less spending across the board, which slows down the economy and helps bring high prices or inflation back under control.
So, ultimately, it's all just this incredibly delicate balancing act. Here in the U.S., the Federal Reserve actually has a dual mandate from Congress: keep employment high, but also keep inflation low. It is a constant tightrope walk between fueling economic growth and making sure the whole system remains stable. You know, when you step back and you look at this whole system, it's pretty easy to see why someone would say this. The entire mechanism we've just explored is what funds everything from life-saving cancer research and new technologies to the very roads and bridges we use every day. It's the system that turns our savings into human progress.
So, we've pulled back the curtain on banking, from simple storage houses for gold to the complex, powerful engines of our modern economy. But this system is always changing, always evolving. So the final question is for you. Now that you see the mechanics behind it all, what do you think comes next?